So hopefully we're all kind of like going, okay, I kind of get all this. I know who I'm dealing with and I know my role. And especially the part about authority is all pretty important. We want to make sure that we can be in the right role and help the taxpayer appropriately. So as we look at that, how do we even just do the simplest thing that sometimes can throw up the roadblocks right at the beginning, get our power of attorney or tax information authorization form in as easily as possible? So the first thing is, as you just mentioned, do we always have to do a power of attorney? Well, no, maybe we want to just provide information to the IRS. Maybe we want to just get some information like on an 8821. I just need some wage and income transcripts. I probably don't want to do a full power of attorney, quite honestly. If we want to allow, and there's some that you don't even have to do this on. If you are a tax matter partner on a partnership, you don't need a power of attorney. If you're discussing information with a fiduciary, and if they have like non-written consent, the taxpayer gives you the IRS verbal consent. There's various ways that you don't have to do a power of attorney. So just be mindful of that. But once a power of attorney is in place, here is really what happens. You got to make sure the taxpayer understands how this happens, because no communications should take place directly between the IRS and the client once a power of attorney is in place. If an IRS employee continues to contact the client directly, you should call the manager to report that improper contact, because they should not do that. It's not allowed once a power of attorney is in place. But a taxpayer can go against it if they want by reaching out to the IRS directly, because just because there's a power of attorney in place, it doesn't mean they are not allowed to speak to the IRS. It just means the IRS is not allowed to speak to them. But that can really mess things up. In my office, what we do is we warn the client if they reach out to the IRS directly and don't allow us to fulfill our role as a representative, we go ahead and take it as the client wishing us to no longer represent them, and we're going to revoke our power of attorney. So it's just being aware of how this rule works. What is a power of attorney? How does that work? They are not allowed to reach out to the taxpayer once it's in place, but the taxpayer can ruin that by going ahead and reaching out to the IRS once it's in place. From there, if we look and say, okay, how do we get this to them? The power of attorney, or TIA, depending on what you're doing, can be faxed or mailed to the service center. You also, let's just say you're working with an agent, maybe in the collections, automated collection service, wherever it is, you can fax it to them and they can go ahead and forward it to the CAF unit. But normally we're submitting it directly to the CAF unit, and supposedly they're going to process it within 2 or 3 days, but often I'm seeing it can take longer, maybe 10 days. The truth of the matter is, if it takes longer than a couple of weeks, they may have lost the fax or mailed request. I have been told that if the fax machine there runs out of paper, they have no way of knowing what they don't have. So commercial software like Canopy, it's awesome. It's a great way we call it checking the CAF, because they update every day. We just check and be like, okay, it's not there yet. Next day, not there yet. Oh, today it's there. We're going to go pull transcripts. So that's kind of the back end of what's happening. You can go ahead and fax it to the representative and get information right then, but you're going to say, yes, please forward it to the CAF unit. It doesn't always mean that works, because they could forward it to the CAF unit and it doesn't get there. So just, check on your CAF. That's one of the things that is good to do. And if you're not sure if maybe that it made it there, it's a good practice to include a power of attorney in your written communication if you're kind of unsure if it was really processed before. If we look at common rejection reasons, the most common one is dated signature is so important. If it's missing a representative signature or date, or the taxpayer signature and date, even the dates and time there, they have to be pretty close. You can't have like the taxpayer date it, let's say a year ago, and then you date it a month ago. I mean, that it doesn't work. If there's a mismatch between the ID number and the name, if it's just generalized, if you're just like all years, all tax matters, it's not going to work. You got to be specific. So these are some common rejection reasons: missing signatures or bad signatures, the tax ID number doesn't match. All these kind of logical things, believe it or not, they'll cause lots and lots of rejects to happen. What'll normally happen in a reject is they mail it back to the taxpayer. So we send it off and we're going, gosh, what's happening? We don't have any word back. And they'll send it back to the taxpayer, and then your taxpayer forgets to tell you that it doesn't go through. So these are just kind of what's happening in the background. We also have something going on now called new authentication rules. So they're now requiring representatives to pass an authentication procedure prior to working with them. So they may ask for your own CAF number or your own personal address, social security number, birth date, something to establish your own identity. And really what has happened is people were either maybe in an office impersonating a representative in their office, or somebody random. They want to say, okay, now we want to know who we really are dealing with. So That's their solution because some have pretended to be the authorized representative. They want to try to curb the issue. So just know that's happening, and that's something they may do. How do you revoke or withdraw one? Well, the tax information authorization, it's valid until you revoke it by the taxpayer or a representative. You have to do it in writing. Now, if you issue a new 8821, it doesn't get rid of the old one. And doing a power of attorney, it doesn't get rid of the 8821. So you want to make sure, and you got to take care to ensure the authorization is revoked when you've accomplished its purpose. Maybe you just want to grab some transcript information to help prepare a return. Make sure you revoke that 8821 properly when you're done. Same thing for a power of attorney. It's valid until it's revoked by the taxpayer or withdrawn by the representative. By the way, it does the same thing, it's just two different words. A taxpayer revokes, a representative withdraws. So that's just what wording is used on there, if that makes sense. If you file a new power of attorney, it actually overwrites the old one if it's the same tax period and type of tax. If a taxpayer wants to add another representative, they can, but sometimes making that go through the CAF properly is a little messy, so often a brand new power of attorney with everybody on there will work good, but there is a spot on line 6 that they can go ahead and attach the old copy if they want. But how does this happen if you don't want it on there? Well, a taxpayer is going to sign brand new, like today, if they're revoking. A representative is going to sign it today if they're withdrawing. What I like to do in my office is I write it at the top of the form. Be careful not to write over any original information, but I write withdraw, I sign it, and I date it. And that seems to work pretty good. So withdraw is the word you use as a representative and revoke as a taxpayer. If you don't have the form anymore, now you want to hold onto these like gold. It's much easier to do that way. You can do it without a form, but you have to indicate all kinds of stuff on there. What is the authority withdrawn? What is the tax matter and period? It has to be signed and dated, list the name and the tax ID and address of the taxpayer. It's a lot easier if you just retain your 8821 or 2848 for when you're ready to withdraw or revoke it later. Other authorizations, there are other ways that we can work with the IRS, and this I'm just going to touch on really quickly. Third-party designee is that checkbox on, you prepared a return says, do you want to, be the third-party designee? You can do some really limited stuff. You can learn about refunds or provide a little more information. It is that it expires 1 year from due date. Doesn't matter if there's an extension or not. And it takes a little bit of time to record that on the IRS system. So very limited. You can do a couple things as that. As a 706, that is similar. So an attorney, accountant, or enrolled agent or somebody can represent an estate on a limited basis, can receive some notices, just help out a little bit there. There is oral disclosure consents. That's where the taxpayer calls the main IRS number and has to speak to IRS directly and gives permission to somebody to help them, but it's only responding to one issue raised on a notice. It allows the person to kind of get information and give information, and then it just disappears after the issue is resolved. That, of course, does not affect in any way a power of attorney for the same tax period. It's just a taxpayer giving oral consent for somebody to help them with a notice. There's another one called an oral tax information authorization, or they refer to as OTIA. Taxpayer again calls the main IRS number, and here they actually transfer it to a CAF unit. They actually input this authorization into the CAF unit while they're on the phone. So the taxpayer has to speak to them directly and give them permission, say, here's my appointee. If they know it, they're going to give the appointee's CAF number, say what periods they're going to cover, and it can be any third party like friends or family or business or an accounting firm, and they can receive information, they can get copies of notices, and they can call in and identify themselves and exchange information, but it's not as full-blown as a true representative. But then the same thing here, when the account is resolved, the decision should be made to revoke that, and that has to be in writing when it comes to those. There are unenrolled return preparers. They have very limited representation. They can only represent in front of a revenue agent. Remember, again, that's in exam because they prepared the return. They might be able to for customer service representatives or other agents of the IRS, and this is mostly during an exam for what they prepared, or maybe in regards to, specifically about a return they prepared. They can't really represent in front of appeals or revenue officers or other IRS employees, institute any sort of agreement. So they can do a few small things. They cannot sign anything on behalf of a taxpayer either. So we're looked at all these various things of, authority. And we talked a lot about authority and how to properly get these forms in and what some different types of authority are. but we have yet to do our last little bit, and that's how we work with taxpayer information. There is so much out there. I'm going to touch on it just real quickly here. A Freedom of Information Act is awesome. It gives a person a right to access information at, not all, by the way, not all IRS records have to be released. They can redact or withhold some information, but you have a 20-day time limit that they have to comply with. So you put in a FOIA request, and if they deny it, you have a right to appeal it. And here's where sometimes you can get information. Let's say as you're working an audit, you may want all the auditor's case files if you're going to appeal that, for example. Some records, in fact, you can only get by written request. So this is a tool in your toolbox. This is how we can deal with information, but also keep in mind there can be some fees. Often there's no charge for like the first 100 pages, but they may do 20 cents a page after, or no charge if it's like $10 or less. So depending what you're requesting, there may be fees, but here can be a very valuable resource for us in getting information. E-services, definitely a valuable resource because we can electronically obtain transcripts, work with third-party software, and just do it so simple and so easy that what they're going to do is, make sure that it's really you. They use two-factor identification. I like to use the Iris To Go app because I log in to get information. I get a code on my app, plug that in, it knows it's me, basically. And through that, you can also go through e-services and do transcript delivery services to your own secure mailbox. These are all, just think of it as lots of tools in your toolbox. Think of it as like your arsenal of tools here. You can get account information, wage and income. There's so many different transcripts you can get through the service that it is an amazing and valuable resource, quite honestly. There's also identification number matching tools. You can do that sometimes through e-services. Maybe you want to make sure that this person is, business or individual or whatever, that their ID matches before you do things for them. There's online payment agreements. You may be able to request an online installment agreement or payment agreement without IRS interaction. Now, there are dollar limitations. There are things you have to make sure of, all returns are filed. I get into a lot more of this in the introduction to collections, but just know there's some really awesome tools out there. And yes, you have to already have the power of attorney recorded in CAF, but man, think about the quickness that you can maybe resolve someone's case if all they need is an installment agreement. Definitely know that the Internal Revenue Manual is out there. This is the IRS Employee Manual. We have access to it. Become familiar with it. If I just list some of these sections, you would have all the tools in your arsenal to understand appeals. That's Part 8. Collections all lives within Part 5. In fact, even the offer and compromise area is Part 5. Exam, penalties and interest, these are some really awesome areas. Audit technique guides. If you've never heard of some of these, I'm just kind of throwing out some nice little tools in your toolbox. These are basically all this very specific information. Let's say you want to understand cash-intensive business or attorneys that's being audited. They have an audit technique guide that says exactly how they're going to audit those businesses. There's so much, self-help tools, information, irs.gov. There's also free online education. Canopy is awesome for that because they put out very good quality education without cost. You get continuing education credit. The bottom line, I'm giving you so much here just to kind of get your interest in there and kind of wet your whistle, you can say. But think about it. With just a little knowledge, you absolutely have the ability to take this to the next level. I want you just to imagine what you can achieve for your clients as well as yourself by saying, you know what? And this is where I was a few years ago. I am passionate about this. I really want to help the taxpayer, and I can do this. So just think about that, the possibilities. I want to remind you to please check out Part 2 of this because there's so much more in that area as well.
All right. Thank you so much for attending today. We've got Tanya's information there as well as how to get a hold of her, get into the Canopy community, ask other tax professionals some different things, kind of more case-specific things, as well as other courses, as Tanya mentioned. We do hope that you'll join us on Part 2 of this session as we're going to go into a whole lot more things, and Tanya's actually got a lot of great content on the Canopy platform. And if you have any questions, please reach out to us or to Tanya. We'd love to help you out, and we will see you on a future session.